is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, excuse me. Looking good, Billy Ray. Feeling good, Lewis. Well, folks, we've got gold breaking down today. We've been waiting for this level. We're getting very, very close to 1,300 per ounce. As you can see from the chart that we had in our newsletter over the weekend, that this is the number we've been looking for. We're about 15 bucks away. The number in silver is about another 35 or 40 cents lower. We're trading about 1950 right now in silver, which suggests that going below some of these prices, we're going to be looking at a much lower gold price, at least by about $15 from this level, if that's the case. Now, this is an important support at 1315 because that is a 1.27 expansion off the last low to high that we had, and we always look at those numbers. So keep an eye on that because I think if we get down here a little bit lower, another $15 lower in the gold, it will also offer a pretty good low risk buying opportunity. It's much better to buy it at 1,300 than it is at 1,377. That much I'm 100% sure of. So just keep an eye on that. The second one the reason why it's so very important, folks, is because we focused on this, over the weekend, looking at this. But if you'll take a look at the long-term gold chart, you're going to see that same 1, 2, 3, 4, 5 expanding triangle, also known as the diagonal triangle or the reverse point wave, that came in right spot on at 1377. That was a perfect 382 of the high from 2011, and it was a 1.618 expansion of the move from swing 3 to swing 4. In other words, from the high in late April to the low in mid-May. If you expanded that by 1.618, that also took you to exactly 1377. So now we're only in the second week down, and we've only had a few down weeks here over the past 6 or 7 months. We've had 5 down weeks in early April, and then we had 1, 2, 3, 4, 5 down weeks in May, and now we've had this run up. So this correction, if we don't hold here, you can see here that we'd be looking at something a whole lot worse. But 1,300 is the target, but we have really strong support here at the 1315 level this morning. That's equivalent to about 1950 in the silver. So we want to watch that, what's going on in the silver market. We've seen the same thing, happen to silver over that same period of time, because if we look at the long-term chart in the silver, you're going to see a similar situation where we had a 382 from the 2011 high, which was spot on. And we also had a 61% retracement of the high from 2013. So those were two very important numbers from the Fibonacci sequence that we like to watch. And the patterns were lined up nicely with that. We had an ABCD pattern in the silver. So we'll see, what the retracement is going to be here on this run. Longer term, I still think it looks really good. But right now, it's basically having a sell-off, which is, to be expected. Nothing goes up forever. We'll go on to the next one here. Okay, one other thing we wanted to mention is yesterday we were also talking about the crude oil market. We have broken below the key support at 44.40. And we're now trading down near a very key level at 43.60 in the crude oil. We've been to 43. Just to get that absolute low end, I can see it. 43.69 was a low. Watch it very, very closely at that level between 43.60 and 43.40. There's several expansion numbers there that look very interesting. That could be very interesting. So we'll see what we'll we'll see what's going on. Some of these, we have too many comedians in the Tiger Den, folks. That's all I can tell you. Anyway, keep an eye on 1950 in silver, 1350 in the gold, and 3360 in the crude oil today. Those are very, very important numbers if you watch the Fibonacci summation sequence. In other words, we're watching expansions and contractions from previous swings coming down to tell us that these numbers are very, very important. And we've been looking at these for a couple of days now, so we should pay a little bit of attention to them to see if they're going to hold up. We have a whole different situation now in the stock market with the help of Microsoft overnight. Microsoft being a big Dow stock, as well as being in the NASDAQ, is going to cause a little ruffle on the upside. Whether we go crazy or not, the Dow would have to get up more than 100 points for it to violate that key resistance level that we've been looking at that 18,600 level. And it certainly could do that without any trouble at all, that's for sure. Just remember that any market that can give you 100 points can take 100 points away from you. That's neither here nor there. But we're going to open strong in Microsoft. One of the questions we had this morning from one of our folks in the den here was what would be the resistance level, and we're going to gap above the 78% retracement. And so the only other resistance is that old high around $57 a share. But that's not where the real strategy could be today. And I think the real strategy could be in the gold and the silver, looking to buy those for a pretty good rally, and then also the same thing in crude oil. But the reason why I'm looking at that is because it gives you a very, very low risk entry on something that has a very high margin. You're talking about a $5,000-$6,000 margin in gold, and yet you can trade it there for about $3 a share, and that's a pretty good risk-reward ratio, given the fact that these markets can react, quite quickly against the trend as short covering comes in, if short covering comes in. Yesterday, if you recall, we also talked about the potential for looking at wheat. And we did look at that yesterday, right on the air. Right after I was off the air, we got down to 13.18. I have gold on my mind, as Willie Nelson would say. We got down to that 4.18 level. The low was 4.16.5. We rallied about 7 cents off that low. And right now it's setting it around the 4.21 level. So it's still at a very, very attractive price if it's going to hold. Now, corn and beans are going lower. Corn looks like it wants to take out the lows. Boy, oh boy, what a...
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at the silver market, looking at it on an hourly chart. As you can see by that dark blue line there that indicates that's an ABCD pattern that we're watching that goes down quite a bit lower in the silver, as you can see, down to around $1,900 an ounce. But the key is that this is acting much more bullish than the gold is. You know, gold has already taken out that old low and is very, very close to, making that 1,300 level should we get there. Now, the reason why 1315 is so important in the gold is because it's taken over the last 5 days what the price swings have been in expansions, and that's what we're looking at because we're expanding to the downside, and that's why we come up with 1315. That's the same number in silver that we look at that at 1950. That's basically a 1.618 expansion of the last move that we had to the upside, which was equivalent to about 65 cents. So that's how we try to arrive at some of these points, because markets are either expanding or contracting, but you have to be able to spot a place where you want to, as John Logan calls, play defense or draw the line in the sand. You would be able to see, a spot there that you don't have to risk very much, when you're doing it. That's one of the reasons why, looking at gold around that 1315 level, that the risk there is about $3 an ounce, and the reason for that is that if it gets much below that, you're going to be heading down to that original, the longer term ABCD pattern at the $1,300 an ounce. Just a few weeks ago, you couldn't get anybody even think that gold could get to 1,300, but we're almost we're not very far away from it right now. We're just a heartbeat away, so we could certainly do that. Okay, we've had a question from over the course of the last 24 hours. Someone has called in asking again about the situation in the stock market. And basically, we are over this full moon, which was yesterday. Whether we're going to make a new high or not, I don't know. Again, we're going to be looking at that same number in the New York Stock Exchange Index that Tom O'Brien has been talking about. If you'll recall, his number on Monday was 10,819. And so far, the high in the New York Stock Exchange Index is 10,810. So it's very, very close. And that is nothing more than a 1.27 expansion of the last 5-day swing down in early June. Let's try that, early July. And that's really what we're looking at, is that expansion to the upside at that price. Now, that's pretty much spot on when you're looking at 5 digits. you're probably 99.9% there if that is in fact the case. That equivalent number in the New York Stock Exchange is 18,600, folks, for sure. Oh, we got a caller from Singapore, our good friend William. William, how are you?
Oh, I'm good. Thank you. Thank you for picking up my call, Mr. Pesavento. And you are really spot on about the gold. We were just, wondering the last, 1 over week, gold refused to get out before 1324, and we've been waiting for a long time. And you have been mentioned, that be patient about gold.
Yeah, you have to, because this thing does jump around quite a bit.
Yes. And I would like to ask you, a few times you mentioned about the risk, is maybe $8, $3. Are you using the ABC target and the difference between the ABC target and the current, spot price in gold?
No, what I do, William, is I look over the last 3 days and I watch for markets that are making 1.618 expansions. And if I see a 1.618 expansion like we have here at 1315, I say, well, if it gets below that, then I don't have any idea where it's going to go, and I want to get out of it there. So the risk at that point, would be, $300. Now, if we get $3 a share per ounce. Now, if we were to get down to 1300, then I have to give it a little bit more flexibility, because I'm setting at a 1.618 number, which might go, $5 or so, but certainly not more than 8, I wouldn't think. And that's why the difference between $3 stop and an $8 stop, in my opinion, is warranted at that time.
Right. Okay, I got it now. And looks like, I think looks like the current price, I mean the low today about 1314 looks like it's quite well supported right now. So I think your call on 1315 is really spot on.
That's known as a 15-minute intraday call. That might last 15 minutes, Williams.
Okay.
Okay.
Thank you very much, Mr. President.
Thank you for calling in from the city of the Lion, the Lion City. Okay, folks, the next one we're going to be talking about is the crude oil, because we have the same situation. We've mentioned it already on the show in the crude oil, that we have this really strong support around 1360. So keep an eye on that, in the oil, and we'll see what's going on. Now, there's another market that we've been watching and we've been bearish on, and we did cover our shorts down there at the 171 level, and that is the Treasury bond. The problem is it hasn't rallied very much, and most of it is due, of course, to the rally that we had yesterday in stocks brought on by the earnings in Microsoft. It appears that they are going to be making money forever and ever and ever, as they have been since 1982. Now, if we get below, the 170.16 level, which is a full point from where we are in the bonds right now, you're going to be breaking down below the 61% retracement of the last swing, folks, and that will really be a very, very negative sign, in my opinion. I'll put this up here so you folks can look at it. But you'll see the actual price is 170.01. But if we get below that, that's telling us that we're ready to probably go lower, because we did bottom right at the 50% retracement level. But the trouble is we couldn't even rally to a 382 retracement. Would have taken you to 173, and we only got to 172.10. So it was quite a bit off from those levels. And Treasury notes are also, acting very, very badly. So these notes are, they could be the canary in the coal mine for some of these people, because nobody in the world thinks that interest rates can go higher. I mean, I think it's Larry Williams and myself, that Jeff Grundlock, whoever that guy is also, there's three of us. There's probably a few others out there, but I'm just looking at patterns. I know that interest rates we have over $4 trillion in money out there that is at negative interest rates. $4 trillion. I mean, that's just unbelievable that people would even think about something like that. But when there's no skin in the game and their money is being handled by somebody else, then that's what happens. So be aware of negative interest rates, folks. That something's not right with that.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we are seeing the market open higher. S&P's up by about 5 points. The Dow's up about 50, and most of that is related to Softy, Microsoft. So we'll see what's going to happen to this when the market's open. Remember, the first hour of trading is amateur hour, so you want to be aware that when that happens, you want to be a little bit cautious. I have some interesting information here. I'm doing a Paula Douglas, Mark Douglas's widow, is doing a special publication. It's going to be coming out in the first part of next year. Some of the traders that Mark has worked with over the years got together, and we are going to share stories that we've had with Mark Douglas over the years, and some of these will really be amazing. Most of you folks know that Mark and I were very close, and over the years, but I first met him in 1982 in Las Vegas. He and Paula had just gotten married, and he was working with Tim Slater at CompuTrack, and this was before I was on the floor of the exchange. I was in Vegas for a golf outing, which had nothing to do with golf, but I went with two of my trading buddies from Chicago, and I had met Mark. And he had just come out with a book. I believe The Disciplined Trader had come out right around that time, as I recall. And I was happy to meet him, and I wanted to listen to him speak. And he said, "Look," he said, "don't listen to me." He said, "Go into that big conference room there and listen to this guy talk." And I said, "Why?" He said, "Just trust me." And I didn't know him from Adam at the time. And so what I did was I went into the room, and it was a John Bradford seminar. John Bradford was a marriage counselor and psychologist, and I went into the room, and I was the only man in the room. I mean, there must have been 300 women in there, and they were talking about, basically spousal abuse. And I had never been exposed to that, but boy, oh boy, you talk about being in a situation, be like in an Alcoholics Anonymous room where you have people, sharing their stories. And if you've never been to an AA meeting, you should go just to see how lucky you are. And that it's really amazing some of the stuff that people go through, because it's really quite it's scary. It's scary is the only thing that you can say that it really is. Anyway, that's how I met Mark, and then later on, I'm not going to share all these stories because it would take up the whole rest of the month probably. But when he first moved to Tucson in 1997, he's been thinking about coming to Tucson from Chicago, and we shared an office, and he wrote his book Trading in the Zone in our office that we shared together, and traders would come in to visit, and he would collect their data and stories and stuff, and that's how he built these different ideas on trading that are, basically legend nowadays. But he really is really missed. But I'm going to be sharing some of these stories with you over the next few weeks and months, just as I have to write them out. I've got to, prepare them anyway for manuscript. But one of my favorites is we were sitting there one day, and I was working with a student from Rio de Janeiro, and I actually hit a wrong key on my keyboard, and what happened was it fired away all kinds of oscillators came up. There must have been 6 or 7 different oscillators, and lines were all over the chart. You couldn't tell it from one to the other. I mean, it was that silly as how to try to define it. And the guy from Rio de Janeiro said, "What's that? What's that?" And Mark was standing behind us, and he said, "Oh," he said, "that's Larry's secret $10,000 trading system." And the guy jumped out of his chair, and he said, "I'll take it, I'll take it." And Mark and I started to laugh, and we used that as a punchline for, oh my God, so many years. But this is a situation when people get their mindset on something that they think they're looking at. It's really quite amazing. And keep that in mind when you're watching the the conventions for both the Democrats and the Republicans that these are folks that are trying to give you their ideas of what their platforms are going to be. So certainly keep an open mind, whether you're red or blue. You want to be able to make your own decisions as you come up to these things. So right now the stocks have actually sold off a little bit. We didn't get anywhere near that high, those numbers. And remember, this is the full moon yesterday, so this is where we should turn down from if we are, going to do that. So we'll see if that's going to be the case. It's amazing that I have had a small short position for the 24/7 service for the last couple of days, and it's never hurt us, which really surprised me considering the news. And so it hasn't worked either, but it hasn't hurt us, which is good. So we'll see, what's going to go on. If you did buy the wheat yesterday at that 418 level, what I would do is I would really tighten up your stop. You don't have to risk a whole 10 cents on that. You could risk just half of that to, a nickel, because we're still making lower lows in corn and also in beans, and that could pull the wheat down. Even though the wheat looks like it still could be okay, it's still a bit early in the game to see if, what will happen with that. So we'll just do one thing at a time. But we did open a little bit lower, about a penny or so in wheat, which isn't too much. We've had a question about one of the things that we watch, which is the IWM, which is the Russell 2000 ETF. And I'll put this up, and we'll run over this just to take a look at it. And you'll see, hold on one second, I got to move this over. You'll see here that we have a beautiful head and shoulders pattern present here in this IWM. And if you look at the shoulder to the head from the 2014 to 2015, this is a very long-term chart, folks. You'll see that the symmetry between the shoulder and the head and the shoulder are very perfect, and your two shoulders are exactly at the same price. And that's at that 120, 121 and change level. So that makes a very, very interesting spot, from a technical, because a head and shoulders pattern, if you have a retracement, like we have a perfect retracement at the 78% retracement, and if you look at the chart closely, you'll see that you have a 3 drive to a top pattern that started in early April. And then you have perfect symmetry from the left shoulder to the head and from the head to the right shoulder. So this thing is bearish until it gets above 123. And if it does that, that would be like the Dow Jones getting above 18,600. That would tell us that we're most probably, heading down is what we would be looking at if we were watching the IWM. Remember, that's just those are stocks that are in the small cap segment, Russell 2000, and the ETF for that is IWM. So watch that with a little bit of caution, because if we get above 123, it's going higher.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've had another question about how to handle risk. In other words, let's just assume that we went long gold at 13.15, which was the number we were watching. That was equivalent to the 1950, and so we're both trading right at those spots right now. All we're doing is we're looking at the ranges that we've made, looking at an hourly chart. Over the past 6 or 7 hours, you want to see what those ranges are. So if you have a range of $6 or $7 in gold in an hourly chart over the period of the last 6 or 7 hours, you know that that's in the realm of being right in the normal range. Now, if you would get a bar that was be more than $6, say out to $9 or $10, then you have an outlier event, so it's expanding. And so that's why you try to reduce your risk by basing it on what those ranges are. Now, Larry Williams did a whole and it's still very, very valid today, and that is the average true range, because you have to consider a gap in there if there's a from the high to the low of some other time frame, that if you'll have a longer bar because of a gap, and that means the average true range is from that gap, not just that hourly chart. Now, you won't get any gaps on an hourly chart, but the principle is still the same. You want to see things that are acting normally. You don't want to see things that are acting abnormal, and abnormal means that it's moving more than like 1.618 of an average bar. That tells you that, something's not right here, so the risk is starting to increase, i.e. volatility, and then you have a better chance of looking. And remember, it's all about probabilities and risk control, folks. I give you some ideas in here. Some of them work, some of them don't work, but it's basically the probability and risk control. That's all you're really that's really all you have in your favor when you're looking at pattern recognition, because you can't work with any fundamentals. Well, I don't, but I imagine some people can. But the fundamentals, getting back to economics, make it really, really difficult, to try to add up all the beans that are out in the field to see if, supply demand is going to equal. Whereas you're working with a price chart, it's certainly a whole lot easier to look at a price chart to give an idea of where you are with any particular, conclusion or trading pattern. That's really what I'm trying to say. Stocks are almost unchanged now. We've got the S&P is about unchanged on the day, where Dow is up slightly, so we're still having a little bit of a bullishness, but the fact that we didn't get higher than we were in the middle of the night was really quite surprising to me. We did make a slightly higher high in that Dow Jones E-mini contract by just a few points, but we never came anywhere near the 18,600 level. That's the key level to try to keep an eye on. And of course, today in that New York Stock Exchange Index that we watch so closely, we opened about unchanged. So we opened up just very, very fractionally this morning, up about 3 points, which is pretty much unchanged. But that number that Tom O'Brien talked about on Monday, 10,819, came very, very close, because the high this week so far is 10,810. So that's 99.99% pure as far as looking at numbers. That's the bottom line of what we're watching in here. We've had a question about the corn market, and we're looking at December corn. And remember that old 450 level wow, that's 350. Boy, these prices are getting sneaking up on me. But we've had an old low at 350 in the corn for a long time. We had a nice rally of about 70 cents a bushel from that level, and now we're down near testing it. We're 350 and a half. The old low that we had was at 349 and a quarter. I think if we take that low out by very much, I don't think you're going to see the market collapse. Part of the reason for that is there's an ABC structure that comes right in at 348 and a half in the corn. But, again, that could literally, give up the ghost, and you would have to stand aside. The soybeans, November soybeans, which is new crop, have given back all of the gains that it made early last week when we had a potential weather scare. And then we're moving, to the downside. Now we've started to break now in silver, just as we were on the air here. We were watching 1950 as an important level. We did get down to we're trading right now at 1945. That tells you there's something not right. That silver does want to go lower, and so if you're watching silver, you'd certainly want to be if you're long that, be very, very careful, because you could drop another 25 or 30 cents. And you'd see that you would be looking at something very, 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 very dramatic. But if it gets below 1945 in the silver, I would consider that a failure. And basically, in gold, we're at 13.15. It'd have to get to 13.12 in order to be a failure. And we're still looking at the crude oil at 43.60. We've been down to 43.69. And all these numbers will be interesting to see what happens, towards the end of the day. But here, the heat of the battle in the first hour of trading, which is always the most exciting, nothing is really happening too dramatically as of yet. That doesn't mean it can't change, but that's what we're watching, at least right now in the first hour of our trading for the day. Now, someone's asked me if I've done all of these trades. The only one I've done is I bought gold at 13.15, and I was covering some short at that level too. So, no matter what happens today, it's been a good day in the gold market, because I've been showing folks that it has a really strong probability to get between 1315 and 1300. And if you believe in those charts, you should be able to say, okay, well, I only have to risk $5 or $6 on something that's worth 13,150. I should be able to take a look at it to see if it's going. It's actually $130,000, not 13,000. So that's the bottom line of looking at the silver here. Keep a very close eye here on this market in the Treasury bonds. Down around this, just right below 171, we should have some pretty good support. But that also could, not happen. But watch it very, very closely, because we're really on some really sensitive numbers here in the bonds. And this has been the big daddy rabbit, folks. This is the one that's pulled everything up, because everybody knows that we're going to go to negative interest rates forever. well, if not forever, at least till the end of the next millennium. So we'll see if that's going to be the case, but one does not know. But we'll have a better idea. We got a break coming up, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the Dow Jones up about 10 points so far this morning, and haven't done a whole lot given the fact that Microsoft had such great earnings come out. Now, always keep in mind, I've posted the chart of the Bradley model that was done by this gentleman in Santa Barbara, And, it's different than the one that we use because of the weighting that he uses versus ours. This didn't pick out the low in January that our model did, but his high comes in right about now, which is at the full moon. Whether that means a lot or not, I don't know, but I'm basing everything on that 5-wave reverse point wave with the diagonal triangle 1, 2, 3, 4, 5 pattern, similar to what we saw in gold just a week or so ago. And that's what I'm watching, with the market. Any move above 18,600 in the Dow Jones would certainly tell me that this thing is totally wrong, and we're most probably going to go another 100 points higher in the S&P if we in fact do that. So keep in mind that this is a probability. It's certainly not a certainty. Now, if you bought the wheat. It's up about 3 cents from the where the entry price was. You have two choices. I would raise the stop. You're risking only $100 now to move your stop to around 14.16. Wow. How about 416? 416 on the wheat, and part of that is the fact that you have weakness across the board in copper and silver and crude oil and everything. And if it starts to increase here, these hedge funds that are in the markets, if they're on the wrong side, they have to liquidate, and that'll cause even more selling. So keep your stops as close as you can during a day like today, because you're at such critical levels in gold and silver and crude oil, all these things, and treasury bonds. There's just a lot of things happening, and it's coming at a time of the full moon, so you want to be, really, really aware of the possibility there could be some accentuated moves at this particular time. So it's still early. We've got a half hour to go. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.